And then we'll take this video later and we'll put it on our Facebook pages as well. But this morning we are with Josh and Jerry from Metro Mortgage. Good morning to the two of you. We appreciate you being here. Jerry, good morning. And we can see the wintry mess that we have this morning behind you here. But that's not stopping. We talk about interest rates this week. That was a big part of the conversation from the Fed. And we're always talking about if a home comes on the market, how quickly it sells. And that's still happening out there, isn't it?
Yeah, absolutely. It is. It's not quite as frothy, I might say, as it has been in the past. In the past, we've seen 10 offers on properties, and we've seen few minutes on the market kind of thing, people doing things, crazy things like waiving their inspection. So we've kind of passed some of that. The market, it's still a seller's market, so your point's still well taken. Not quite as aggressive as it was. Maybe a little rebalancing going on, maybe a little more logic coming back into the market right now.
Okay. And Josh, you're on the ground as well. You're at Metro Mortgage, just a couple of doors down from us. You have your Hart location as well. And does it matter if somebody's in Ludington or somebody's in Hart or Mason County or Oceana County? There is still there's buyers and sellers that are communicating and trying to gobble up this and gobble up that, right?
Oh yeah, for sure. And we're licensed in multiple states. One is Michigan included, so we'll help throughout the entire state. But yeah, we can tell the spring market's starting to heat up a little bit more inventory coming on the home buying market. I know people are getting tax refunds back, so that might be a good use of the tax refunds is setting that aside maybe for some down payment on your first home.
Is it seasonal? I mean, when we think about home buying and selling and such, especially here in West Michigan, when we wake up this morning and we got snow on the ground, right? Do people think, good morning, do we think about that?
Yeah, there is seasonality into real estate and mortgage business for certain. I think December, January, and February typically are a little bit slower. But frankly, with the mild winter that we've had this year, people's psyche and mental attitude, it hasn't been quite as in a hibernation mode as it has been here. Now, today is, having said that, is an exception today. But generally, in the wintertime, we've kind of moved through a little less seasonality this year because of the warmer winter actually helped the situation a little bit.
All right. If you're just joining us, we're talking with Jerry and Josh from Metro Mortgage. I've got some really poignant questions. Just curious. I mentioned a few moments ago about the Fed, right? Not raising rates, not lowering rates, keeping them the same there. Is that a benefit to the home buyer, to the seller? Where is that stand? So, and to the banks as well, if you don't mind.
Yeah, so maybe to put rates in perspective, I've been around quite a while and looked at a 50-year history of rates, and rates peaked in 1981 at 18.4%. I moved to Michigan 43 years ago and got in at 13.5%. Then I refinanced 11%. I thought, man, I'm in tall cotton now. So rates are kind of a relative thing. Rates hit a low since 1864. Back in February of 4 years ago, they were in the high twos actually, and from 1990 to 98, they were actually 10%. So we're in the high six kind of area to 7 kind of range right now. It's more of a return to normal. But the Fed, as you pointed out, just had concluded their meeting. They're projecting 3 rate decreases later on in the year here. So I think rates are actually going to improve. So we're encouraging people to get into the house now, and when rates drop, maybe as much as 200 basis points perhaps later in the year, we can do a refinance for them. Get the house that you want now in the location that you want, and we'll take care of the rate at a later time.
Because that's where the mystery is, and that's where people say, and you hear it. Obviously, you guys hear it, that well, maybe rates will get better, prices will get better, stabilize, go down. But are we, based on what you just said, you don't necessarily have to wait, right? There is options after the sale that you can do, right?
Oh yeah, for sure. To Jerry's point, the expected rate drops throughout later this year. There's a good chance, and I don't like saying it because it's kind of cheesy, but they talk about how you marry the house and date the rate. You can always change the rate down the road. If there's a house that comes on the market that you love because of location or whatever, if you can get into it now. The rate you're going to have right now is likely going to be temporary.
Okay. Does it affect anybody negatively when it comes to adjusting that rate, looking at it, refinancing, and so does it hurt them?
Well, okay, so no, actually, when we refinance somebody, frequently we can save tens of thousands of dollars through that refinance. I did one a while back here, and we saved about $60,000 over the life alone. So a change in rate over 30 years can have a significant impact for the total payback of that. Okay. I might also mention that we have some subsidized rates through our MISTA program. MISTA is a state of Michigan program throughout the whole state. And in fact, we have 6.125 on a non-down payment and 6.625 on a down payment assistance program. So there are some subsidized rate. And I might point out our corporate parent, Mortgage One, that we're part of, we're the #1 lender for 11 years running in a row in the state of Michigan. So we do a lot of MISTA loans around the whole state.
Okay. So let's break it down. Somebody's thinking about moving from renting to the first home. What's the steps? What's the procedure? Where do you put them?
So the procedure is we would run your credit report, and we have some very interesting first-time home buyer programs. We have a zero-down USDA program, so no down payment. If you're coming out of the service, you're a veteran, we have a zero-down VA program to help our veterans, and it doesn't have PMI, private mortgage insurance. And if you're 100% disabled, you don't pay property taxes. We also have a 3.5% down FHA with a gift fund from a family member, which could be a zero down program. And as I also mentioned, we have the MISTA program with the below market interest rates. And if people don't have money for closing costs, we can build those into the program with a 6% seller assist. So you don't really have to have a large, most first time home buyers think you have to have 20% down. Well, you don't. Zero down or low down, and we can build closing costs in the transaction. We're going to hold your hand and take you through the program.
Do you see this day and age that I mean, obviously it has to be on the top of people's minds, that like walking into your office or having that conversation with the real estate agent or their banker and saying, I don't have 20% down. I don't have 10% down. Does it discourage them is the first question. And after that meeting that you have with them, are they feeling better about things?
I think it may discourage them because they might have stuck in their head, you need 20% down for a conventional loan. But once we go through the actual file and go through the products, the programs available to them, you don't need 20% down for a conventional loan. We have a 3% down conventional loan.
Yeah, which is amazing. Yeah.
We've got the down payment assistance up to $10,000 with MISTA that you can pair with a conventional loan. So I think they may come in a little uneasy, not sure kind of what they're what to expect. But after we go through the full breadth of our programs available, I think it kind of soothes them a little bit and eases that concern.
What's some of the questions that new home buyer is asking? How can we prepare them this morning here on the radio to come into your office and say, these are the questions that I heard you guys talking about. Here's my answers to those.
Yeah, so the questions are, what do I need for documentation? Really not that much. You need perhaps 2 years tax returns, need some W-2 forms, some pay stubs, some bank statements. With that, we can put the qualification together. Also, a lot of anxiety when people come in, they're worried about their credit score. So either they're concerned they can't get a loan, or they're embarrassed about it, or whatever. But we have a rapid rescore program. We take their profile, no fee for it. We run it through a computer algorithm, and we tell them step 1, 2, 3, 4, 5. These are things that you need to do to get your score up. We computer model that. It's 97.8% accurate for the credit score rebuild. So we can take that, we can model it. If they follow the steps, we can get them in. Sometimes somebody doesn't have the right ratios. They don't have enough incomes. Maybe they're self-employed. So we add back depreciation. We add back deductions, and we put them in a format where it can make sense. We can get it done. So there's so many overwhelming perceived problems that they think they can't get a loan, and we view ourselves as that problem-solving specialist in the mortgage industry. We put blinders on and we do mortgages, and we're very good at it.
Is there any reason, and I don't mean to discourage people from wanting to buy their home, but I think based on our conversations that we've had in the past, there are some scenarios that you do say to those individuals, 6 months, year, let's wait.
Yeah, absolutely. So we say, look, everything is good except your score, for example, to pick up on your point. We give them the steps to do it. We give them a report card in 3 months. And we say, come back in, we'll re-poll it. We'll do a soft poll so it doesn't affect your score. And we'll give you a report card. So you went from this score to that. So it gives them encouragement that they're on to the right path. It's making progress. 6 months from now, we do it again. They're there. We put the mortgage in place at that time.
And to if you don't mind, to Jerry's point, it's not uncommon for us, especially, loan officers at Metro Mortgage, Jerry, myself, Matt, Katie, whomever, to work with clients for more than 12 months, 2 years, whatever. We're going to hold your hand through that entire process. If we're doing some credit improvement, we're still there for you. We're still going to check in with you. It's not going to be, hey, we can't get you qualified. See you later. It's going to be, hey, we can't get you qualified right now, but here's what we can do, and we're going to help you throughout that process.
Is a lot of it driven on the home that they select? So people are shopping, and they've got their eye on that, and then that's the discouragement that comes along, or the triumph in some cases.
It can be. So there's 3 different kind of homes: manufactured, modular, and stick built, and we do all those. But a lot of times, a first-time home buyer that we're talking about today may be buying a lower-priced home, perhaps because it's their first-time purchase, and that lower-priced home may have some collateral issues with it to it. It may need a roof, or it may need the garage added, or it may need this or that. So we have several ways to help that first-time home buyer out. We can do an in-house portfolio loan, fix it before we buy it. We can do a post-closing repair escrow where we set the money aside, close on the house, and then fix that roof or put that new well or septic in and so forth. So if there are collateral issues that may not make a deal happen normally, that problem-solving orientation that we have, we find a way to do it. We do a 203K repair, or we do an in-house portfolio loan to fix it, or we do a post-closing repair escrow. So if it's got collateral issues or other, try to give us something that you can't buy a house, and we'll figure it out.
Yeah, that's a good position to be in. Josh, before we wrap up, people are walking in. They're nervous. We talked about that. They've got a lot of questions. It sounds like Metro Mortgage is looking out for them, and I think for the long haul on it. Is there a success story that recently came up? Anything that we can share with the audience that in this particular scenario, somebody was looking for their first time home? Anything that you want to share?
Yeah, I mean, what's pretty common is people come in not thinking they can get pre-qualified, and we end up working with them. I'm currently working on a client right now that's house shopping because he was pre-qualified. From me, came in, wasn't sure if he could even do anything, and it took a couple of months, and had to do a little something on his credit to get his credit up. Recheck the credit was up. Pre-qualified, like pre-qual letter sent. So those happen quite a bit, and I hope that for especially for first-time home buyers, but for anybody that's kind of in the market to buy, I hope that they see the passion that comes from us. Because to Jerry's point, we have our blinders on. All we do is mortgages all day long. So we focus on solutions. We focus on getting people into the best situation possible. And I just hope they really see that they don't need, if they have their checking account or savings account at a bank or credit union or a car loan, they don't need to go to them for mortgages. We are the local mortgage lender, and we are extremely passionate about it.
All right, a good point there. Not to be negative towards the financial institutions, but is there 1 or 2 points that are worth sharing this morning of why go to Metro Mortgage versus the bank?
Yeah, I think there are. Certainly in the construction lending world, we're doing those in-house, and we have a much more effective, user-friendly construction program for that. And I'm doing a first-time home buyer. We're doing one right now. We're talking later this morning here. First-time home buyer's doing a construction loan. Okay. So we're doing that, and it's a self-build. So we're the only ones that do that I'm aware of. The other thing we do for interest rates, we're not tied into an in-house in-house banking kind of rate. We're shopping nationally for rates to give the most competitive rate that we can across the country with several platforms that exist. And then we also have several what's called non-qualified mortgage, where if you don't quite fit in the box, we have some quotes. Lower score kind of options that some people wouldn't do. So we really feel people want to do the right thing. They want to own the house. They want to pay it on time. They want that pride of ownership, and we try to find ways to get them into it.
Very good points. Josh, I'll leave the last word to you this morning. Anything that we missed talking about that we want to share with the audience this morning?
I don't think so. I think just to recap, if there's anybody, like you're saying, people getting tax refunds back, anybody looking to enter in the home buying market here this spring or on this snowy day, give us a call. We'll help hold your hand throughout the process. We'll make sure that you're comfortable and confident at the end of the day. So,
all right, very well said. Jerry and Josh, we appreciate both of you coming in this morning. Josh, if somebody wants to reach out to you, phone number, website, stop in the office, all that stuff, tell us about that part of it.
Yep, phone number 231-425-5555. We're located. We have 3 offices. Our main office here is in downtown Ludington, right across the street from the public library in the Stearns Hotel Plaza. Stop in. Somebody's always there. Otherwise, give us a call and we can set up a meeting.
All right. Sounds good. Great information. Jerry, thanks for coming in, as always. Yep, absolutely. And Josh as well. It is 8:40 now, 20 before the top of the hour on 102.7 Mom FM and Hot Country Hits.